Hello everyone, welcome to EduTap and welcome to today's session. So today we are going to revise the RBI notifications and the RBI press releases for June 2025. So this is your monthly current affairs session that happens on every Wednesday. Okay, so every Wednesday we take the monthly current affairs session for your schemes, for your reports, and today you have the monthly current affairs session for the RBI notifications and RBI press releases, where we are going to revise the important RBI notifications and RBI press releases from the June 2025, and this is linked to your RBI EduTap document that is provided in the course. Okay, so if you are a part of the course, then this session is going to help you revise the RBI EduTap document. If you are not a part of the course, then you will get to know that what are the important RBI notifications and RBI press releases that you should be covering from June 2025. Okay, so welcome to the session everyone, and good evening. Good evening. Give me a thumbs up if I'm clearly audible and visible and everything is going fine. So give me a thumbs up, okay? So now, without any delay, let's get started. But before that, do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay, nice. So let's get started with the first question. This is first question, that is the direct question. It can come in your phase 1 of the examination particularly, and try to answer this question, and for each correct answer give yourself 1 marks. Okay, so what is the answer of this question? Which of the following is the title of the 5-part documentary series launched by the Reserve Bank of India in collaboration with Jio Hotstar to visually document the RBI's 90-year journey and its function? So the answer that I'm getting is, okay, Nilesh and Guru Raja, Harshal, Suprava, Mukund, Fruity, Mayank, everyone is saying D, and that is absolutely correct. So RBI unlocked beyond the rupee, this is the answer. So basically this was the RBI press release that was released. So RBI in collaboration with Jio Hotstar has launched a 5-part documentary series titled RBI Unlocked Beyond the Rupee. The project has been produced by Chalkboard Entertainment, and this visually documents the 90 years of the history and the journey of the Reserve Bank of India. Okay, so now coming to the second question, that is in regards to your qualifying assets of the non-banking financial company microfinance institutions. So the definition of qualifying asset of NBFC-MFIs has been aligned with the definition of microfinance loans. Okay, so the qualifying asset definition has been aligned with the microfinance loans definition. Qualifying asset of NBFC-MFI shall constitute a minimum of how much percentage of the total assets provided, or the total assets of the NBFC microfinance institutions. So this is the question. So yes, I'm getting the answer B, and that is absolutely correct. Very good. So here basically the definition of microfinance loan is, the microfinance loan is defined as the loan as a collateral free loan where no collateral is required, given to a household having annual household income up to rupees 3 lakh. So now this is the definition of the qualifying asset also for the NBFC microfinance institutions, and it has been said that the qualifying asset of the NBFC microfinance institution shall constitute a minimum of 60% of the total assets of the NBFC microfinance institution. That means 60% of the total assets of the NBFC-MFI should be going for the microfinance loans, that is the qualifying asset. Okay, so I have taken a session on this also where we have discussed about the qualifying asset criteria for the NBFC-MFIs, that is lowered from 75% to 60%, and 60% is the qualifying criteria now. Now coming to the next news article or the next question, with a view towards enhancing ease of doing business and keeping in view the sector-specific constraints, it has been decided by the Reserve Bank of India to allow the importers of our country to make advance remittance for import of shipping vessel without bank guarantee or an unconditional irrevocable standby letter of credit up to the US dollar of how much? So here I am getting the answer C. Okay, yes, that is absolutely correct. Good to see that you people are able to answer the questions in a very fast manner and correctly also. So with a view towards enhancing ease of doing business and keeping in view the sector specific constraints, it has been decided to allow the importers to make the advance remittance. That means for the import, the remittances can be sent up to the limit of USD 50 million if there is no bank guarantee or if there is no irrevocable standby letter of credit. Because see, these are the kind of guarantee and the letter of credit, they provide the guarantee for the exporters that okay, we will get the money. But if the importer do not have a bank guarantee or the importer do not have a letter of credit, so there is no security for the exporters. That's why it has been said that the importers, for the security of the exporters, they can pay the remittances upfront up to the USD 50 million. This is the idea. Letter of credit is basically a financial instrument used in international trade to provide payment security. It guarantees that the seller will receive the payment from the buyer. Okay, so if there is no irrevocable standby letter of credit or if there is no bank guarantee, then in that case the importer can pay the advance remittances for the import of shipping vessel up to the limit of USD 50 million. Okay, now coming to the next question, this is in regards to the review. So on a review, it has been decided that the contribution by the Urban Cooperative Bank toward the eligible funds like the NABARD, NHB, different funds they have, so the UCBs, they can make contribution to the funds of these institutions if the UCBs are not able to meet their priority sector lending target. So if the UCBs, if the Urban Cooperative Bank are not able to meet their targets, they can contribute to the funds of the NABARD, NHB and such, okay, or Mudra and such, or any other entity specified by RBI. Now it has been said that this contribution that the urban cooperative banks are doing to the funds in regards to completing their priority sector lending target, so this kind of contribution by the UCBs will not be considered under the aggregate exposure of the UCBs in these institutions. Okay, so the prudential, so this is the idea. Now the prudential exposure limits for the UCBs for a single borrower or party and a group of connected borrowers or parties are specified as what percentage of their tier 1 capital. Okay, so the prudential exposure limit is there. Okay, exposure limit is there for a single borrower or party. The exposure limit is 15% of the tier 1 capital, and for the group of connected borrowers or parties, the limit is 25% of the tier 1 capital. So the answer here is B, and I can see everyone has given the right answer. Good to see that. So here you can see I have taken a session on this also where we discussed the non-achievement of PSL target. In that case, the prudential exposure, if non-achievement of PSL target is happening, the UCBs are contributing in the funds of NABARD, NHB, Mudra and such, and this kind of contribution will not be considered under the exposure that the UCBs are having to these institutions. Okay, so this was the main idea. Now prudential exposure limit for single borrower or party is 15% of the tier 1 capital, and for the group of connected parties it is 25% of the tier 1 capital. Okay, so all banks excluding the UCBs under all inclusive directions, so basically all the banks, small finance bank, regional rural banks, urban cooperative banks, excluding the urban cooperative banks that are particularly under the all inclusive directions, under the strict directions of the RBI, reporting shortfall in the priority sector lending, they can contribute, they can make the contribution in the different funds like the Rural Infrastructure Development Fund or the other funds of NABARD, NHB, SIDBI, Mudra, etc. Okay, so this is the idea. Now coming, see, another news article that we have discussed with the previous one is that the commercial banks, the scheduled commercial banks, they can also make the contribution if they are not able to they are not able to meet the priority sector lending target, then they can contribute to the funds of the NABARD, and this will not be calculated as the exposure that the scheduled commercial bank are doing to the NABARD. Okay, so if the scheduled commercial bank are not able to meet their PSL targets and they are doing the contribution to the fund of the NABARD, to a fund of the NABARD, so this kind of contribution to the fund of the NABARD will not be considered under the exposure limit of the scheduled commercial bank. Now it has been said that if the scheduled commercial bank are not able to meet their PSL target and they are doing the contribution in the fund of the NHB, Mudra, SIDBI and such, so this kind of contribution will also not be considered under the exposure limit of the scheduled commercial bank. So this is the idea. So before, the deposits maintained with the NABARD on account of the shortfall or the contribution to the NABARD funds on account of the shortfall of the PSL target, so this was not considered, this was excluded from the exposure limit under the large exposure framework. Now it has been said that in addition to NABARD, the contribution to the funds of NHB, SIDBI, Mudra, this will also not be considered as the exposure of the scheduled commercial bank to these entities if it is to cover up the priority sector lending, if the priority sector lending is not completed or the target is not met, then the contribution that is done to these institutions, this contribution will not be considered under the exposure limit. Okay, this is the idea. Now coming to the next news article. So which of the following credit rating agencies had restriction on its use of capital adequacy risk weighted weighing of the banks by the banks? Okay, so credit rating agency, which credit rating agency had the restriction on the use of capital adequacy risk weighing by banks as per the July 2024 RBI circular, but has now had those restrictions removed as per the April 2025 Master Circular on Basel III Capital Regulations. So it is, yes, it is the Brickwork Ratings India Private Limited. Okay, so the answer here is yes, the answer here is C, that is Brickwork Ratings India Private Limited. Okay, so this entity had the limitation, had the restrictions on the credit rating that it can provide to the banks, but now that restrictions have been removed basically. Okay, now coming to the next question, it's a very easy question, and we have seen in the last years that such a question has come in the phase 1 of the RBI Grade B examination. Okay, so as per the existing instructions outlined in inoperative accounts or unclaimed deposit in banks, any deposit account in banks that has not been operated upon a period of dash or any amount that remains unclaimed for dash years must be transferred to the Depository Education and Awareness Fund maintained by the Reserve Bank of India. So if the account is inoperative, if the deposits are unclaimed for 10 years or more, then the money has to be transferred to the Depository Education and Awareness Fund. Yes, very good everyone. Correct. The D is the right answer. So basically some notification was released that a bank shall make available the facility of updation of KYC for activation of the inoperative accounts and unclaimed deposits at all branches, so that the individuals or the people that want to claim their funds or they want to operate their inoperative accounts, they can continue with the operation of their inactive accounts or inoperative accounts with the update in the KYC. Okay, so this was the update that was done. Okay, so this is the idea. Now coming to the next question. So in February 2025, the Reserve Bank of India constituted a 9-member working group on comprehensive review of trading and settlement timings for various financial markets that is under the regulation of the Reserve Bank of India. Now this working group was chaired by Radhashyam Rathore. The Reserve Bank has examined the recommendations of the committee as well as feedback that the RBI has received from the various stakeholders. So now the RBI has decided to implement certain recommendations from the committee. So which of the following recommendations is correct in regards to the acceptance by the RBI? So the market timings for call money shall be extended to 7 p.m. with effect from July 1, 2025. Accordingly, the revised market hours will be 9 a.m. to 7 p.m. So this is correct in regards to the call money market. The time has been extended to 7 p.m. Okay. Now the trading hours of market repo rate, you must have heard about the repo operations where the borrower can sell the security or can sell the collateral to the lender, and the lender is providing the money to the borrower with the promise that the borrower will buy back the collateral, and the borrower will return the money to the lender. Okay, so basically the lender is providing the money to the borrower and is taking the collateral with the promise that the borrower will take back the collateral and will return the money to the lender. So this is the repo operation that can happen in the markets between the buyers and between the borrowers and the lenders and such. Now tri-party repo means that here there is an intermediary in between. So between the borrower and between the lender there is a intermediary that is helping in the transactions to be completed, that is keeping the collateral safe, and that is also helping in the transactions in between the borrower and the lender. So the trading hours of market repo and tri-party repo shall be extended to 7 p.m. with effect from August 1, 2025. Accordingly, the revised trading hours will be 9 a.m. to 7 p.m. So is it correct? No, this is not correct. It should be 4 p.m. not 7 p.m. So the trading hours for government securities market, foreign exchange market and interest rate derivatives market remain unchanged. So first statement and third statement is correct. The second is wrong. So here the answer is 1 and 3. Yes. Correct. So it is 4 p.m. not 7 p.m. for the tri-party repo and market repo. Okay, so these were the recommendations that were accepted by the Reserve Bank of India that you have to keep in mind, and the head of the committee was Radhashyam Ratho. That is also important. Okay, now coming to the next question. The Supervisory Data Quality Index score of scheduled commercial banks has improved in March 2025 as compared to March 2024. So Supervisory Data Quality Index, it is a very important index that you have to keep in mind. Okay, the SDQI developed by the RBI assess the quality of data submitted by the regulated entities to the RBI. It depends on which key parameters. Okay, so I'm getting the mixed answers here. The E is the right answer. It is the accuracy, timeliness, completeness, and consistency. Okay, so these are the 4 parameters on which the Supervisory Data Quality Index depends upon. Okay, so here you can see that for the scheduled commercial bank, that you have to remember that for the scheduled commercial bank, the Supervisory Data Quality Index has improved from 88.6 to 89.3, and the Supervisory Data Quality Index depends upon these 4 parameters, that is timeliness, completeness, accuracy, and consistency. Okay, so remember these 4 parameters, and I have given you the methodology also, that these 4 parameters has the subcategories or sub parameters. Okay, now coming to the next question, that is in regards to the stripping. So we had discussed about the stripping, that the stripping and the reconstitution has been allowed in the government, in the state government securities. In the state government securities, that means the state government securities, the principal and the interest can be divided into the different different contracts, or the stripping can happen. Okay, where the principal and the interest are getting divided. Try to answer this question. So basically, RBI has decided to officially introduce separate trading of registered interest and principal of securities. So a single state government security can be divided into different instruments under the stripping. Okay, so this is allowed in the state government securities now. Before it was only allowed for the central government securities. Now, which of the following requirements are correct in regards to the eligible securities in regards to the stripping or reconstitution in the state government securities? Yes, very good. Good to see that you have the clarity that it is not 15 years, it is 14 years, and it is not 5,000 crores, it is 1,000 crore. The third one is right. That means the securities are reckoned as eligible investment for the purpose of meeting SLR, and they are also transferable. Okay, so the third one is correct. Okay, so the third one is correct. That is 3 only. So here you can see that all fixed coupon securities issued by the state governments or union territories having a residual maturity. So the stripping, so basically the stripping or reconstitution, this is allowed in the state government securities. Now, if the state government securities, they have the fixed coupon securities issued by the state government or union territories that have a residual maturity of 14 years and minimum outstanding of 1,000 crores as on the day of stripping, as well as provided that such securities reckoned are as eligible investment for the purpose of SLR requirements, and these securities are also transferable. Okay, so stripping means the process of separating the cash flows and selling the different cash flows, that is the interest amount and the principal amount, separately. Okay, this is the idea. Now coming to the next question, try to answer this question. Okay, so now try to answer this question. As per the agency bank agreement, RBI pays agency commission at rate determined by it as per the revised agency commission rates. So basically, see, the banks, they work as the agency, like they work as the agency so that the government, see, the Reserve Bank of India is the one that handles the banking facilities, or RBI provides the banking facilities to the government. RBI is also known as the banker to the government. Now, RBI cannot handle all the banking facilities for the government. So RBI pass on some of the responsibility to the agency banks or to the banks that agree that okay, we will be the agency bank for the government. Okay, now these banks provide the agency services, or they provide the services to the government through the RBI, and they get the agency commission from the Reserve Bank of India. So now, how much commission will an agency bank receive for handling a pension payment transaction as per the revised commission? So it is 80 rupees. The answer is 80 rupees here. Yes, A is the right answer here. So see, the payment agency commission, basically the commissions have been revised for the physical mode, for the receipt in the physical mode. That means if the bank is receiving the money in the physical mode, so 40 rupees is the commission rate for per transaction. Receipts in E mode, so for per transaction 12 rupees is the commission rate, and for pension payments for per transaction the commission rate is rupees 80, and payment other than pension rupees 100 per rupees 100 turnover, 7 paise per rupees 100 is the commission rate. So these are the commission rates that you have to keep in mind, that has been updated. Okay, now coming to the next question. So which of the following statement is or are incorrect in regards to the data for the balance of payment during the 2024-25? Try to answer this. So India's current account deficit, try to answer this question. India's current account deficit is at 0.6% of the GDP during 2024-25. This was lower than 0.7% of the GDP during the 2023-24. So there is current account deficit that happened, but it was 0.7%. That has come down to 0.6% in 2024-25. Okay. Now the net invisible receipt. Invisible receipts are the service receipts and the transfer payment receipts. Okay, so net invisible receipts. So in the current account, I hope you know that in the current account there is trade in goods, there is trade in services, and there is transfer payments. Trade in services and the transfer payments, they are known as invisible payments or the invisible trade. Okay, so the net invisible receipts were higher during 2024-25 than a year ago on account of the services and the personal transfers, that is the remittances that we received. Now, there was a depletion of $5 billion in the foreign exchange reserves during the 2024-25. So, first statement is wrong. The third statement is also wrong. Only the second statement is correct. Now, read the question that you were asked about the incorrect statement. So, the answer should be E. How many of you made the mistake here? See, this is what can happen if you are not serious and if you are not reading the question seriously. And this is what you have not, like, this is what you should not be doing in the examination. Okay, because the question is pretty simple. You have read this in the FSR also, you have read this in the yearly BOP data also. We have done this again and again. So be serious, like look here and try to give the right answer. Okay, and do not make this kind of mistake. If the incorrect is asked, you have to give the right answer. Okay, I was expecting everyone will give the right answer of this, and I'm very disappointed in this case. Okay, so now let's hope that you will not make this kind of mistake in the real examination. Okay, so let's move forward now. Basically, BOP during 2024-25, India's current account deficit is at 0.6% of the GDP. Percentage is more important, and it was lower than the 0.7% of GDP in the 2023-24. Net invisible receipts were higher during 2024-25 than a year ago on account of services and personal transfer. Net inflow under FDI at $1 billion during the 2024-25. Net FPI inflows of $3.6 billion. Okay, there was a depletion of $5 billion in the foreign exchange reserves on the account of balance of payment during the 2024-25. Okay, now try to answer this. Whenever there is comparison, you have to remember both the years. Okay, so 0.6% of the GDP 2024-25 and 0.7% of the GDP during 2023-24. Now try to answer this question. RBI has released Reserve Bank of India lending against gold and silver collateral directions. Now try to answer this. Okay, so correct answer. So the aggregate, which of the following statement is or are incorrect first of all? So this direction, I have told you in another session also that this direction is going to be very, very important from your examination point of view. Okay, so the aggregate weight of ornaments pledged for all the loans to a borrower shall not exceed 1 kg for gold ornaments and 10 kgs for the silver ornaments. In cases of the coins, it should not exceed 50 grams in the case of gold coins and 500 grams in case of silver coins. Tenure of consumption loans, that means the timeline for the consumption loan in the nature of bullet repayment loans. Bullet repayment loans, that means one time settlement happens. There is no monthly payments if the loan is of 12 months. So at the end, in the last month only, you have to make the whole payment. Okay, so tenure of the consumption loan in the nature of bullet repayment loans shall be capped at 12 months, which may be renewed. This is only for the case of lending against gold and silver collateral. Okay, the maximum loan to value ratio in respect of consumption loans against the eligible collateral shall not exceed 85% for the total consumption loan amount of up to rupees 2.5 lakh. Okay, so this is also correct. In case of delay, rupees 5,000 for each day has to be given by the bank if it is a problem from the bank's end. So here the C is the answer because it was wrong. Instead of 24 months, it should be 12 months. Okay, and this, like, I have taken a complete session on the directions, so I hope you remember the directions very, very clearly. Okay, LTV ratio also, it is important, you have to remember it, that for the loans that is up to 2.5 lakhs, the LTV ratio is 85% if the in respect of consumption loans. Okay, for the loans that is more than 2.5 lakh and up to 5 lakhs, so the LTV ratio is 80%, and for more than 5 lakh worth of loans, consumption loans, the LTV ratio is 75%. Okay, now this is your homework question that you have to answer in the comment section below. See, project finance guidelines and certain guidelines that were released in June 2025. So there were certain guidelines that were released in June 2025, but like the project finance guidelines, but we are not doing it in today's session because in the RBI NewsTap document, these guidelines are covered in your July month. Okay, so we will be doing these guidelines, the revision of this guideline in the July month, because we are following the pattern of RBI NewsTap, that is your document in your course. So project finance, though it was a direction that was released in June 2025, but this direction is covered in your July 2025 RBI NewsTap document, as well as 1 or 2 more directions were covered in your July 2025 directions. So then we are going to cover it in the next monthly revision session for your July 2025. Okay, as well as in the July, I have not seen more than 4 or 5 important topics from your RBI notification or RBI press release. So in the July month, there will be very less topics to be covered. That's why certain of the June topics will be covered in your July month. Okay, so this is the idea. Okay, so this is the homework question. Try to answer this question, as well as I hope you have enjoyed today's session. One thing that you have learned, that see, what is the difference between the person that is clearing the exam and that is not clearing the exam? One thing that, of course, you are not able to, let's say someone is not able to clear the sectional cutoff. Another thing is the silly mistakes that you do, that you have done in today's session. So those silly mistakes you have to nullify, and especially the first time, like if you're giving the examination first time, these silly mistakes can happen, and attempt like a lot of questions so that you do not make these silly mistakes. Okay, so I hope this is understandable, and you're most welcome, everyone. Thank you. I hope you enjoyed the session. Do give me the right answer of the homework question. See you in the next session. See you tomorrow. Tomorrow we are going to discuss the digital payment index in our session. From the digital payment index, you have seen multiple questions in the previous years of RBI Grade B examination. Okay, so digital payment index, we are going to discuss it in detail for you all. Okay, so thank you, everyone.